Hey, what's up guys? John here. Some huge changes coming to the housing market. If you're a house flipper, a real estate speculator, maybe you want to do a BRRRR deal, maybe you're renting right now and you're like, you know what, I want to get out of this apartment. I want to buy a duplex. I want to buy a fourplex. Well, I'm going to walk you through what's happening right now. This is an absolute bombshell in the housing market. Nobody's talking about this. So you're going to hear it here first. It's going to have a really big impact, trust me. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the housing market. And if you want to invest in real estate and your credit score is between 500 and say 730, you need to increase that score. The better your credit, the more lenders are going to want to lend to you. They're going to want to work with you and you're going to get a better interest rate. And if you have a better interest rate, you're going to be able to borrow more money and you're going to be able to get a much better term on your loan. We'd love to help you. We'd love to help you see that through at GreatCreditFast.com. That's GreatCreditFast.com. Give us a call at 561-430-5900. That's 561-430-5900. Now, from 2020 to 2022, it was the ideal situation to be a house flipper. I mean, you could basically have no skill and you just timed the market well, right? Everything was going up. You could buy a deal that made no sense, and by the time that you were done fixing it up, it made a ton of money. Take a look at this. So over the last, I would say, couple of years, everyone was talking about the BRRRR method too, because people would just buy these deals, little duplex, fourplex, buy the deal, fix it up, rent it out, and then refinance it, right? Everyone was talking about it. People making a fortune doing it. I actually think this is going to be a great strategy stepping into like 2024 and late 2023 is picking up some duplexes and fourplexes to fix up and then live in one of those units, have some adjacent cash flow coming in and reduce your overall monthly expenses. I think it's going to be a great thing. But right now, this is going to have a huge change on the market. So Fannie Mae and Freddie Mac, they control about half of the U.S. housing market, half of an $11 trillion mortgage market. And now this is their announcement. So singlefamily.fanniemae.com, they said, now we've updated our eligibility policy for cash out refinance transactions to require that any existing first mortgage be paid off. They have to hold the mortgage for 12 months. So from the first day that you take on that new mortgage, you have to wait 12 months to refinance. But now before, it was about 6 months. It was about 6 months you could go start to finish. So if you were, buying a property to, let's say, do a BRRRR deal, you're going to buy a property, you're going to fix it up, you had the money, and then in 6 months you could refinance it. That's not bad. That's probably going to be along the lines of how long it would take to do the remodel anyway after closing, right? But now a year, you don't know what's going to happen in the economy in a year. And you look at what house flippers are dealing with right now. A lot of house flippers are in big trouble reducing their prices and really bending over to try to make a deal work because the buyers just aren't there like they were a year or two ago or a couple of years ago. Now what's happening is that these investors that bought these house flippers on hard money loans, 10, 12, 15% interest, if they don't have the equity in those deals and they can't refinance at an affordable rate, it's going to be a big problem. And if Fannie Mae and Freddie Mac own half the mortgage market and you have to go to a private lender to get financing, you're not going to do so at 6% or 7%. You're going to do it at 9, 10, 11%, making things very challenging for a lot of people in the house flipping business. Now mortgage rates are saying it's about 6.77%. 12 months ago it was 3.22%. So mortgage rates have doubled. And so if you're going to buy a property, let's say, for example, back to the example of you renting, and you want to buy a property so you can, make some money and you could reduce your overall monthly cost and you can position yourself to where, if you lose your job or something happens, you still have tenants inside of your building. If you bought a duplex or a fourplex, tenants inside your building that are going to help offset some of your costs. How do you know what that value of that property is going to be if rents are now starting to fall, right? This just came out. December 2022, rents fall in 71 of the nation's 100 largest metropolitan areas, according to the Wall Street and Johnson Rental Index, a collaboration of researchers from Florida Atlantic University, the University of Alabama, and Florida Gulf Coast University. So rents are falling, the cost to borrow money is rising. These new terms are going to have an impact on real estate investors and house flippers. But also insurance is rising and property taxes are rising. What I think is going to happen is I think that these house flippers and people that are, real estate speculators could be walking into a world of hurt in 2023, which could position you as a new real estate investor quite well to take advantage of what's happening. Now mortgage rates are around 7%, but if you look at what Jerome Powell just said, he says that we can combat inflation, we can do this. You look at Joe Biden, he's very excited about the job numbers, saying that we added like 500,000 jobs, and that the economy can withstand further interest rate increases to combat inflation. If we continue moving in the direction of high interest rates, what is that going to do to the real estate market? It's going to really take a lot of buyers out of the game. Buyers aren't going to be able to afford to go buy a $400,000 property, put $80,000 down, and then spend $3,000 to $3,500 a month on a mortgage where they can go rent an apartment for $1,500 or $1,700. It's just not going to make sense to buy, right? Buyers are going to get pulled out. And so if you have a lot of sellers that are real estate investors, people that are house flippers that can't refinance or sell their properties, and you have a lot of these 2 to 4 unit properties that no longer make sense, what's ultimately going to happen? It's going to be an opportunity. You're going to be able to step in and start picking up some great deals. And that's what I think we're stepping into. I think we're stepping into an opportunity in which real estate investors can make an absolute fortune, pick up some incredible real estate deals. So if you're a renter right now, now's the time to stack cash. Now's the time to get out of high interest rate consumer debt. It's the time to build out your credit score, to increase your credit score. If you have late payments, charge-offs, medical bills, anything holding your score down, this is the time to fix it, to position yourself for the best and biggest real estate investing opportunity that I think we're going to see in our lifetimes over the next year or two. What do you think about this entire situation? A 12-month hold period is a game changer beyond, I think, many people's imagination. If you think about how much has changed in the world just over the last 12 months, if you're a real estate investor, let's say you bought a deal 6 months ago, and rates have been continuing to rise, and you're starting to see all this instability in the economy, would you think that the market's going to get better in the next 6 months, or would you think that the market's likely going to continue on a downward trend, right? You likely probably think the market's going to continue on a downward trend, just like a lot of people are, right? So fear pushes people to do things they otherwise would not do. Like Warren Buffett has said, he said that the stock market is a vehicle in which allows wealth to transfer from the impatient to the patient. And that's what we're going to likely be seeing in the housing market. We're going to see a lot of wealth get transferred from the impatient, people that are just scared of the market, to the patient, smart, savvy investor. So if that is you and you want to invest in real estate and you want to take down some really big real estate deals, there's going to be a lot of people that are going to be impatient, not because they just want to sell out of fear. They're not going to have the financial wherewithal and the means to withstand this change. And as the Fannie Mae continues moving in this direction, and there's more and more restrictions and changes, it's going to push people out of the market. Drop your comments below. What do you think about it? Hit the like button, subscribe here, and on my second channel, it's an interactive call-in show and a podcast, and LinkedIn, Twitter, Instagram, and TikTok up in the banner. And again, if you need help fixing your credit, we'd love to give you a free consultation at GreatCreditFast.com. That's GreatCreditFast.com, or give us a call at 561-430-5900. I'll catch you guys in the next video.